Can you see my screen? So I didn't really expect we'll hit 1850. That's way bigger than the average through range. And that was 3-bar play, and 3-bar play I usually exit most at the 3rd bar, which is around here. And I told myself, okay, that's done. I'll just bail right there. And here it did another $1 move. So yeah, that thing was crazy today. Okay, let's see what we have there. I want to share with you a trade for Kaiser. He sent it to me. I don't think he's here right now, but he did a killer trade on GME. There it is. Come on. So there it is. Look at these guys. I'll share with you the rest of the charts right now. Let me see what else we have there. I think that would be interesting as well. And maybe that here as well. Okay, let's keep the one actually as well. I'll have the 60 and the 1. I don't think he does non-killer trades. So look at this. I really like this trade. And basically, I wasn't watching GME. Had I been watching it, I think I would have traded this thing as well. Why is that? It's unfortunately, those are not candlesticks, but it's still fine. Those are not that tough to read. Anyway, look at this. There is the range. This is what I love to see. And Kaiser noticed that earlier in the day. He established his position. One thing which he is doing really well is patience. I personally, if had taken this thing around here to the long side, I'd have partialed most of my position around here. Kaiser, on the other hand, he held it for the break of this level, where he added more to his position, and he started partialing closer to these levels right here. And after that, the rest of the levels and the rest of the management he's done on the 1-minute chart was based on the levels, right? Partial at a level, partial at a level, partial at a level. Those are daily levels. I guess he's taken from the daily charts or from way back before. Adds closer at the pullbacks, adds closer at the pullbacks, and he partials at the levels. So that was a really good one, and I like that. He caught around 100% move, and that was really impressive. He didn't know. I bet he didn't know, right? He just saw a pattern and he went for it. It worked out, and then he managed his trades, right? For me, when I've taken a TLRY, did I really know that it's going to break out and it's going to make this move? Not really. I didn't. I've taken it and it worked out, and that wasn't only it. Look at mine. I've taken plug today as well. And did I know it will break down? Not really. I tried it. It got me stopped out. I tried it another time, got me stopped out. Tried it a 3rd time, it finally worked out. INTC, I really wanted to catch this move for a breakout. I tried it to the long side, it got me stopped out. I tried it 2nd time, small partial, and that was it, right? Eventually it did work out, but my timing was a little bit wrong. GME, look at this. At first, I thought it will break up. It wasn't long. Eventually, it turned out to be a short where I've taken it to the short side. Do I really know it's going to break out or break down? Not really. Your job is to go with the pattern, go with your analysis, trust your setup, and then manage it as best as you can. No, he didn't do it, JC. I don't think he will. Anyway, let's take a look at your trades, and if we have time, I'll just go in detail through mine. And this is for Thomas. Thomas traded, Thomas, we both got into this trap, right? You took it at first time for the long side and got stopped out. You took it 2nd time and got stopped out. I guess that was exactly what I've done right there. Both of us tried it twice, and it got out 2 times. This was bad though, right? You don't want to take it. Was this? Oh, it was short, yeah. So this one right here, it still didn't break the range, right? You still had a support close here, a support close here, and most likely it will be long rather than short. If you zoom out more the charts based on the 60-minute chart around here, you will see that there are definitely some levels a little bit back there, which could prevent it from going lower. So the short, I definitely wouldn't have taken in this play. The longs both were really good, right? The longs both were really good. They didn't work out. Could have just simply continued watching it because eventually it did work out. What you need to be happy about is that your analysis were right. The stock eventually did break out. to the direction where you wanted to break to, but unfortunately that didn't happen exactly when you wanted it to do, right? INTC, there it is. 1 minute chart, a little bit back. So I started my position in the pre-market and I get sold out in the pre-market. I re-entered and the same thing, lost this one. But later it was good. There is a pattern around here, right? Sorry, around here. Short, we're not taking the bullish engulfing sandwich because we're looking for the long, right? And here we're trading the bearish engulfing sandwich because we're trading it to the long. Now, here comes the importance of looking to the bigger time frames and looking at the bigger picture. You might tell me, Ahmed, this is a pattern, a bullish engulfing sandwich. Why don't I take it to the short side? But on the other hand, I should take this one to the long side. Because overall, the pattern is more strong than it's weak, right? And there are some levels right there which will prevent it from going lower. So this pattern is supporting my overall direction. I would take it to the long side, especially that we're having a fake breakdown. And these are the favorite, right? When it breaks down and then squeezes all the way back up. Geo, let's see what you traded there. Let me actually close this. All right, Geo traded plug. So you took it to the short side, right? Short and stop. Yeah, I also traded this thing to short side, and I guess we got the same entry right there. One thing though, your stop loss I think was a little bit tight on this one. I would have used it a little bit up there. Why is that? You can't get into a position on one candle and have your stop loss at the very same candle before it closes. Because it could open, go lower, you will take it to the short side, then it will pull back, and then it will continue after getting you stopped out. The tightest thing you could do after a breakout or on a pattern is the half, right? Safer to use the previous candle high, and I personally wouldn't use the previous high because this is too much. This is $2 or $1.50 and unplug. This is so much of a move. I'd personally I would have used the half of the candle right there, and then you could add here for the break of the low of the day. Unfortunately, it didn't work out really well, and I don't think it would have worked out, but still, stop loss need to be technical. Perfect. This is for Dardan. Dardan traded mRNA. Let's take a look at mRNA. 60-minute chart is decent. Not the best one, right? But it's still decent. You can't have anything perfect. I see around the range right here, or the high of the range around here. We did a fake breakdown around here. Then we're squeezing back up. There is another actually fake breakdown which happened in the pre-market, and then there is a squeeze all the way back up. You've taken it to the long side on a new 1 minute high. I like the stop loss. You've given it enough room. That's amazing. Let me see if we could tighten it actually. Though I don't think we'd be able to tighten it. Yeah. This is good. I personally would have used it a little bit higher or a little bit higher, especially if it's after the pullback, but still this is good. This is totally good. I like it. Good partials right there on the 5-minute chart, partial on the second, partial on the third. This is good. I would have definitely taken a partial around here. This is a must because those are 2 big 5-minute candles or 3 big 5-minute candles, and we could expect a pullback to the 9 before a continuation. So that's a good partial right here. This is a good partial. The rest is break even. Really good job, Dardan. Matt traded DPW. Let's take a look at this one. So this one gapped up so much. That was after hours, right? I guess this was after hours. Earnings or something, or maybe before market close yesterday. This is a really huge move. Dropped down, came back up. So this is not my play. I personally would have avoided trading this thing because on the 60-minute chart, it looks like a double top, right? And last couple candles, they are so weaky. The price right now is sitting in the middle, and it could literally make the W shape and continue going higher, and it could just sell off. So this is just a little bit difficult to read. I doubt we would have watched it, but let's take a look at the smaller time frames. You've taken it to the short side, you get about tight stop loss right here or here. Entering at the breakdown, now that is decent because you're entering at the breakdown, but you're okay. The first thing, remember, if the stock is extended from the 9 and the 5, and you're taking your position to the short side, manage to have your stop loss closer to the 9 and the 5. Exactly, all of them were really tight. Until here. This is type 1 ABCD pattern, right? Stock goes down, gets far from the 9 and the 5. This is actually type 2. And then it goes to the 9, but slowly. Touches the 9, and then you can take it to the short side and go for the continuation. So on those ones, you needed to have your stops a little bit wider. The idea was right. The stops were a little bit tight, but still I wouldn't have traded it based on the wicks around here. It's just difficult to read in my opinion, and I want to see a possible breakout or a possible direction before I take it. Buying pressure, and then we're having selling pressure. It could do anything, right? But the 5 was really clean. Matt, you use the 1 minute chart for entry, but you need to see a 5 minute chart setup. Right here, there was a 5 minute open range breakdown, yes, but it was far, right? You want to have an ABCD pattern, for example, on the 5 minute chart, which is closer to VWAP with a breakdown down there, or you want to see a pattern on the 5 minute chart and try to get it as close as possible to the resistance from the 1 minute chart. I personally wouldn't have taken an entry around here as close as possible to the resistance. Yes, it's enough clean that it's forming a reverse ABCD on the 5, but this is not good for an entry. Maybe around here, anywhere around here, I would have thought about taking it. Why is that? Because we had a fake breakout, which also bounced off the 9 and the 5. We're coming back down, and now you can manage your entry around 590, somewhere around 590, 595, right? Even below, before forming a new 5 minute low. So you need to see a setup on the 5, but the entry is based on the 1. Perfect. Samir traded GME. So we both got into the same trap. So you took it to the long side and you got sold out. Then you saw a bullish engulfing sandwich and you took it to the short side. And the third one was also short, which worked out really well. So I was actually trading with one of the members. And I'll tell you the funny thing. I told him I like GME to the short side. I like it to the long, how it was sitting up in the pre-market on the smaller time frames, the 1 and the 5. I told him I like it to the long side, but I hate it on the 60-minute chart. And I told him this, I would try it to the long side, though my rule is clearly telling me not to go against 2 weeks. I've been telling you that, and I told him that 2 weeks, don't go against them. But I was so tempted to take it to the long side, and once I took it to the long side, I told him, if I lose on this trade, I really deserve it. And I told him, I really hope I will lose on this trade so that I stop doing that. Because if it works, next time I'll do that again. And I've taken it. I lost it. That session is actually recorded. Hopefully, if he allows, I will upload it to YouTube. But yeah, I've taken it, and I got stopped out, and then traded it to the short side, which was the original plan, because this thing on the daily chart, it was so extended. Is there a daily here? Yeah, there is. On the daily chart, this thing is around 200% up there. This was a really huge move up there. And I expected that we'll have at least a small pullback, at least somewhere to 28 before a continuation, because it will not just simply shoot back up. And the 60 was really good for a breakdown. Still taking it to the long side, and I got sold out, and you did the same thing. You took it to the long side, got sold out, but glad that you went in with your original plan and you could manage to make it all back. So that was really good. Trade 4. Where is your trade 4? Trade 4 to the short side up here. So this, I personally wouldn't have taken it. Now, I could have tried it, but there is a rule. Why don't we take this thing to the short side? I know you waited for the 9 moving average on the 5 minute chart and then shorted it, but there is a rule. What is it? There are actually multiples, not only one. Yeah, that's the first thing. We don't go reverse ABCD patterns against a hammer. Most of the time they fail. Hammer is a reversal candle, and they could do this usually. The next thing, what's the next thing? Anyone? Yeah, exactly, Gio. So you took it to the short side on the way up. It was on the way up on the 1 minute chart, and it was on the way up on the 5 minute chart on a clearly bullish pattern, right? This was fully engulfing white candle after a hammer, and you took it to the long side. And exactly, that's it, good. Parabolic pullback, no M shape. and it's not at the retest, right? See this wide bar candle on the 5-minute chart right here. You took it on the top, and finally this didn't form an L shape. It just clearly dropped down. If you had taken it to the short side around there, I'd have liked it a little bit more, because we did break out right there. We got back down inside the previous swing high, and you are forming a new 5-minute low. Still not ideal. I wouldn't have taken it because of this hammer right here, but at least if you take it right there and it goes all the way down here closer to the hammer, and then decides to make a higher low like we said, and go back against you, you could exit at break even. Make sense? Perfect. JC traded NKLA. Let's see what you did there. So NKLA. Okay, Ayman, please advise on when you would have added and then exited on my first trade, which ended at 10:55. So this is the end of your first trade. I think that my trade management and this was awful. Okay, let's take a look now at it. And I'll see. So the 15-minute chart, I can't see the previous pre-market data, unfortunately, but let's say there is a breakout around here and you took it to the long side for a breakout on a 3-bar play. I like this. So there is a break of the range on the 15-minute chart or a breakout on the 15-minute chart. Daily chart looks really good. Today it went to 2084. So yeah, there is a daily bar actually back then. Or after that, I think you didn't screenshot it. Or it wasn't from today. It is yesterday. Yeah, it is yesterday. So there is a daily bar which is breaking above the consolidation on NKLA to the highs. The daily is looking good. The 15 is breaking out. On the 5-minute chart, 3-bar play, closer to the 9 and the 5, took it to the long side. I take a big partial around here. Remember what you said? On a 3-bar play, you try to take a big partial right there. And that's what you did. You did take a partial. You added one more partial right here in case it makes a parabolic reversal. Gave you a 3-bar play. Now look at this. Another 3-bar play. What do you do on a 3-bar play? You partial on the very same candle. Always. If you see a 3-bar play and you are getting into it, you take a big partial at the high. Another 3-bar play, you get on long to it, take a partial on the third. Okay. It pulled back, you add it to your position, it made a lower high. You took a partial, and I would definitely take another partial right here. Why is that? This looks like a head and shoulder on the 1-minute chart, right? There is the neckline around here. This is the neckline. You're having a reverse candle or a reverse hammer or shooting star at the high of the day or closer to the high of the day, forming a lower high while still having distance to the 9 and the 5. And you know it could go at least closer to the 9 and the 5, which is your average because of your ads. Or maybe not your average, but because of your ads, your average increased a little bit higher. You definitely want to lock in some profits because you said that. You took only 30% partial and you still had big position in it. And eventually, if it breaks the neckline, this is a reversal candle, head and shoulder, right? Let me draw a clear line right here. It is most likely going to go lower. So this right here would have been most of my position out. I'd leave some to break even, but this would be most of my position out. Here I took it to the short side. This short I wouldn't have taken personally. Hammer on the 15-minute chart. This is 70% pullback for an ABCD pattern. I wouldn't take it to the long side for an ABCD pattern, but still I wouldn't take it to the short side. Why is that? This could either make an ABCD pattern to the long side, it could make a reverse ABCD pattern to the short side, and I want to make sure which of those is going to happen. That's why we are looking for an M shape or a W shape on these type of trades before we are getting into them, right? Yeah, ABCD to the long. So even with an ABCD to the long, it was still a huge drop, right? You needed to see sort of a W shape before you take it to the long side, just to make sure that the trend, okay, now the trend is getting in your favor, because right here, the trend was just going down, right? You want to make sure that the trend is going in your favor. Once you are having that right here and a trend change, you could establish the position to the long side. You don't need to catch the dip or to catch an entry as close as possible to the lows. It's usually difficult to do that. wait for the confirmation, and yes, you'll have wider stop loss, or maybe you'll miss half of the move, but you don't need to catch the whole move. You need to catch 2 hours, right? You're welcome. All right, let's see what Cole did. Cole, any advice on for risk management when trading open range breakouts for stocks with large spreads? So look, if you're trading a stock with large spread, uh, you know it will move more. Large spread isn't there for like nothing. Large spread means that the stock moves more, and you can make your money based on the spread. Don't exit at break even. Why is that? Because the spread will get you to your break even. Sometimes even you get so bad before your technical stop loss because of the spread, which sucks a little bit. Anyway, what did you do there? Let me see. You tried it to the long side or to the short? Most of your trades. Both, short mostly. So I'm going to tell you, I've been long biased on this thing to the short side more than to the long side, and there are 2 reasons. Could you guys tell me why this is good to the short side? And if you like it to the long side, give me your reasons why you like it to the long side. Okay? Extended on daily. Okay. What else? Patterns, maybe, whatever you see there. Okay, doji in the daily, they have the day with climactic volume, good. Okay, I'm keeping up with you. So Joey would like it to the long side because it's a view up. All right, that's good. Let's just see. Any reasons which you like, which would make you like to the long or to the short? It's totally fine, right? Okay, good. Now look at this. The 60, as Joey said, it's good. It's good for both directions. If you just look at this around here, like this week wasn't there yet, right? This week wasn't there. We had only 1 week around here. So if you take a look at this way, removing all the moving averages, removing the daily chart, removing everything else, this right here would be good for both directions. It could be good to the long side and it could be good to the short side based on where it breaks to, or at least based on where it's sitting at. Maybe it's closer for a break up or closer for a breakdown. But if we combine this, we had gap up, gap up, gap up, right? Like 3 gaps. It got so extended. At the high on the daily chart, you are having a doji with increasing volume. Today we gap down. 60-minute chart, if you go for a pattern, we are forming a reversibility pattern, right? Moving averages are above. Me looking at that, I get more short bias rather than long bias, and this is why I gave it around 3 tries to the short and not to the long. To the long side, I doubt I would have given it a try, but I think I said it to the chat room. I'm not sure, maybe to Peter or someone. I would go for this thing to the long side only above 67.50. And why above 67.50? Because this is the C level for the reversibility pattern. This is the C level. As long as we are below it, I'd be shorting it and go all the way down there. And if we break it, we'll have room all the way to 69. First 68, there is a daily level I see, and then all the way to 69 and above. So long around here, I don't have tried it. Only above 67.50. It would have been only short tries. Now, I see entries so low. I don't know what was an enter or what was stop loss, but basically you always need a technical stop loss. If you take it to the short here, stop loss at least around here, at least, right? If you take it to the short around here, stop loss again, at least around here. But it's totally fine. Most of us are getting into these type of trades. And I showed you my trade yesterday. I think it was an INTC. 3 trades, 3 losers in a row. That totally happens. But make sure to go with the pattern, right? You're welcome. Zaki, SPCE. So let's take a look at this one. Oh, this is the favorite long. Why is it a good long? But and when is it a good long? Like if I've been watching SPCA at that time, let's see who's going to catch the right timing of this thing. 100% it's a long. 60-minute ABCD, perfect. And what's the perfect entry around here? False breakdown, perfect. There is the false breakdown. And what's the good entry after the false breakdown? Give me just the price range. What price range would be the good entry? 32.50, perfect. 32.50, 32. Anything around here is good. Why is that? We broke down. After the breakdown, we squeezed all the way back up, right? All the way back up. And once you go into the middle of the range, you're no longer interested in a short. You are interested in a long. And then wherever you have the pattern, you take it to the long side. This is the 9 and the 5. You try not to enter on the third candle. So you start counting from here, 1, 2, 3. You could enter on any of those candles. First candle is the best. Decent candle is the second, all the way to 32.50. Third candle, you try to avoid it. Now, you've taken it to the long side around here. That was a little bit earlier or early. I know maybe you've been long biased more than short biased because of how the 60-minute chart looked like. But you don't try to force it with the 60. You try to find the favorable direction or the overall direction on the bigger time frame, especially that it gapped up. Actually, that's also a good thing. And then you try to find a setup and a pattern on the smaller time frames. And on the smaller time frames, we are still going down, lower high, lower high, lower high, lower high, until here you are squeezing back after a hammer. So an entry around here would have been decent. Not the best, to be honest, because we could have easily made a reverse ABCD pattern, which I would also not take because it's a reverse ABCD pattern against a hammer. But an entry around here would have been decent. Not the best, but decent. Now, short, I doubt I'd have taken it to the short side, to be honest. Why? Because of the hammer. Not going against reverse ABCD patterns. It did work out for you. Happy about that. Long around here, decent. Not the best, but decent. You've taken it for a parabolic reversal, but on parabolic reversals, you want to see at least 2 candles, right? And this is the 9 and the 5, so this is the first candle. I usually don't go for parabolic reversals on first candles. Why is it good? It is good because there is a fake breakdown and you went back up. Again, not the best, but it's decent. I would give it around B+, right? Best entry on this setup would have been around here. Now, good, a little bit later, I would avoid the short. Long, not the best, but still not bad that you're taking it. Definitely better than the short. And you could have added around here. And added around here, especially that you are already in a long, would have been amazing, actually. But really good, like 3 out of 3 trades. Bitang. So Bitang traded plug. Let's take a look at this thing. Let's take a look at this thing. So you also were short bias on it, right? Your timings were better than mine, better than most of us, I guess. You were really patient with your entries. Unfortunately, it wasn't that clean, right? But it still was good. So overall, we discussed how the bigger time frames look like, and then it's giving us sort of a reverse ABCD pattern. I don't like this entry so much around here. I'm not sure if I take it or not, but even if I did, it's not the best, right? We were making lower lows and lower highs, and then we made a higher high around here, which made it look a little bit bad. So you took it to the short side, you got stood out, and you tried it to the long AC, right? One time. Or it was a short on another stop. I think it was a short on another stop. That was unlucky that it got you out exactly to the penny. Now, around here, it's decent. Why is that? Because around here, you're at least having a double top, and now you are starting to go lower. So this is amazing. This was really good. Partial all the way back down, and you exit off around here on the daily level. That was really good. Unfortunately, it squeezed all the way back up. And this would have been a good entry. We said that, right? 67.50. It's breaking 67.50. You could take it to the long side. I wouldn't definitely take it to the long side on the way up. There is a pullback or a retest. and there is the entry to the long side. But yeah, really good job. My plug wasn't a good winner. After all, my plug was loser. After all the trades I've taken there. Aaron traded A, B, and B. So let's take a look at Airbnb quickly on the Airbnb. What did it look like? Oh, this was actually good. Again, wasn't watching it unfortunately, but this is good. Range around here. Overall, the daily chart is strong, right? And if we break, we could get a target all the way to 178 or something, right? Yeah, 179 at least. There it is. So this wouldn't have been bad right there. And let's see how you traded it. Taken it to the long side earlier, scaled in, and then started partialing. Ads on the way up, I wouldn't really recommend them, but this is not a bad ad. Could anyone tell me why this is not a bad ad? Usually I would avoid adding on the way up, but this is decent. Not the best, but decent. Yeah, that's a geo. We're breaking off a level from momentum play, right? We saw on the 60 that there was resistance around there, and we squeezed right above it. And if we just go directly into it like that fast, it's not bad. It's more likely that it's going to continue. If we're reaching this level slowly like this, and then we're breaking up, I wouldn't add. But since we broke it like fiercely like this, I would expect it to run a little bit more. So that wasn't a bad ad, but unfortunately you exited on it, re-entered, and now this is a little bit late, right? You see this is the retest area, it's holding the retest area. Better entry would be around there. You entered at the break and your stop loss was not really technical. Test stop loss somewhere around there. You would have been stopped out eventually if you didn't take any partials, but this should be the stop loss right there. But I like the trade. One thing which I would recommend is not to scale in like this. You're ruining your average. If you like the setup so much and you believe that the entry should be above this level, go in, full in one entry, double click and in. If you think that the entry is actually above this level around here, and anything below it is still 50-50 or a not ready setup, then you get in small, 25% of your original share size, 50% of your original share size, because you want to get a good average. And then if it works out and it breaks to your original entry or planned entry, you could enter the rest of the 50% and you will have an average of around here, which is good, right? So again, if this is your entry plan, go full in, don't scale in and don't increase your risk more than 1 hour. If this is your entry plan, but you know that this is a late entry and your average will be so messed up, 1-to-1, get in smaller. If there is step, even if it's not completed, add average here, then partial. Bobby, let's see what you did. Bobby, APHA. So this is good. I could tell from now that we are having a range somewhere around here, right? At least for around 2 hours. Along with that, we're having an ABCD pattern on the 1 minute chart. The ABCD is happening around 1088, which is here, right? Which is the retest area. Breakout, retest, ABCD pattern with a 5-minute opinion range breakout. This is so clean. Break to the pre-market level, 5-minute open range breakout, ABCD pattern on the 1 minute chart. If I take this thing to the long side, my stop loss would be somewhere around here, maximum around here. Partials, yes, you're right, they were a little bit too tight. Why was that? Oh, you had 2 losers already. Okay, see that. Usually we try to trade the setup, but if we're down, we're starting to trade our PNL, which is a bad thing, but that's something you would need to work on individually, right? The good thing is at least you held on to your winner. So really clean setup. Good job, Bobby. Okay, let's see what you did. Okay, traded an ABCD on the 5-minute chart. Not bad. Yeah, I would say it's not so bad. It's not so clean as well because we did a fake breakout above the pre-market level, and then we dropped back down like kind of parabolically, but again, it's still not that bad. It's okay. I think it's totally fine. Glad you re-entered. Let me see what you did after that. Was that a short and a stop then a long? Because the short wasn't, glad you flipped, because the short wasn't ideal on this one, right? We looked at the 60-minute chart and we discussed that. We did breakdown. After the breakdown, we're starting to squeeze back up. Overall, we're strong on the 60-minute chart. We don't want to go reverse ABCD patterns against hammers, and along with that, we don't want to go, especially out against fake breakouts, right? If this is the swing low, we want to see stock dropping down, pulling back, and then continuing like this. You don't want to have a swing low, stock breaking, and then it's coming back up. This is not a good reverse ABCD pattern. If it goes like this and then like this is a good reverse ABCD pattern, even if it goes a little bit inside. But small fake breakout and then it goes inside, that's a little bit ugly. I would personally avoid it. I see the reason, because you traded it off the one, right? But we need to look at the bigger picture. The long was good, we squeezed all the way back up inside the range. A little bit early for an entry. I would have waited for it to break the 9 and the 5. Why is that? Because we want to make sure we are inside the middle of the range, or we're coming back above for the break of the range. So 32 would have been decent place. But a really good job on this one. Not the best, right? Avoid this one. This is still decent in my opinion. This was really good. I like it. Let me show you my embarrassing trades as well. I just want to show you that I also mess up a lot. INTC. So 2 losers on INTC. The plan with this thing was to take it to the long side based on the daily chart, or all we gapped up. On the daily here, you could see that it could go down and it could go back up as well. 60-minute chart, at this moment, we still didn't have this wick right here. I liked how it was setting up on the 5 after those double hammers. I considered those double hammers right here as fake breakdown. Now we're coming back up for the break of the high. Took it to the long side. I don't use the wicks as my stop loss, so I put my stop loss below the bodies, and I got sold out for 1 hour loser. Re-entered at the market open for 1 minute open range breakout, which coincided with the break of the 60-minute. And unfortunately, my stop here was really tight. I went for a momentum. I partialed small, exit the rest here. So overall, this was a loser. It wasn't a break even because it was small partial, and I exited the rest for a loser. Later though, it did a good setup. There it is. Bearish engulfing sandwich. I should have re-entered around here, partial, and add at the retest and ride it. Didn't do this. I think I was done by that time. Let's see. Baba didn't trade it. SPCE, I didn't trade it. This one, I didn't trade. GME. So GME, discussed it. Double wicks. Don't like it. Geo, I went for momentum right there, and I'm going to tell you, be honest with you, the stop loss was bad. When I took with that trade I mentioned on ITC, my stop loss was really bad on it. So don't go for it. It was me breaking the rule. So GME, took it to the long side for the break. I had my stop loss around the middle. I went for the break. I expected to break immediately after market open. What happened is it going against me, and I got sold out. Shouldn't even have taken this long. Based on this 60, this shouldn't have been taken at all. The short was good. Double reverse hammer, right? Coming back down, took it to the short side. I knew that you're right. It was jumpy down, and that's why I didn't get sold out. I took it to the short side initially with a stop loss up there. You see, I didn't want to get quicked out because of the price action it was giving us. Then I add to my position, and I move my stop loss somewhere up there, and I added one more time. That this add here was not enough, and because my average or my stop loss is somewhere around there, I couldn't partial anywhere here. I needed to get for my 2 hours, right? So I avoided this all, and I took here. This was less than 2 hours. This partial here on GME, it was less than 2 hours. Why did I take a partial around here? Because we already had a hammer around here, and I was afraid we would make something like a double bottom and come back up, especially that we are far from the 9 and the 5, and this was a hammer there. This is also 3-bar play, and on 3-bar play, what do? I partial at the low or closer to the low, just as precaution. After the break, I took big partials here. This last partial was 70%. Why is it 70%? 200 moving average on the 5-minute chart, plus the average true range. The average true range in this thing is somewhere around $4 to $3, and we already did a move of $5. Rest at break even. PTON. This one was bad. The trade was good, but my management on it was bad. Why did I trade it? Fake breakdown. After the fake breakdown, squeeze all the way back up for the break of the high of the range, took it to the long side and chickened out. Right? This thing could have worked out really well. Around $3 at least to the long side, right? And there was actually a good potential place to add, which is around here. Why is that? Breakout, ABCD, type 1, closer to the line of the 5, add to the position, move my average up there, and then partial all the way up. But yeah, this one was messed up. And finally, plug, I guess. There goes plug. Shorted it in the pre-market because I was short biased on a reverse ABCD pattern. My stop loss up there, added to my position, moved my stop loss somewhere to the middle, get stopped out. Re-enter to the short side. Did I re-enter to the short? Oh, I added one more time at the open and I get stopped out. So this, I guess, was a bigger loser. Then I re-entered here, went for the break, had my stop loss exactly around here for the break. Was a really tight stop loss, should have used somewhere in the middle of the range, but my entry was my fill was bad. So partial and I exited. This was also a loser. And finally it did work out. But this one wasn't a big winner. I think this was only one R winner. Overall, this was minus trade. INTC was fully also a loser trade. What saved me for today was TLRY. This one saved me a day. I think if not this trade, I would have been down. And TLRY, why did I trade it? Good range on the 16-minute chart. Nice slow uptrend. On the daily chart, took it at the break, stop loss, partial, all the way up. Too many partials. This thing doesn't move a lot, and you could see the average range on it somewhere around $1, and a spike of 50 cents or 60 cents, that was too much, in my opinion. And you could see how much I'm partially graded, because right here was already the average true range done. Decided to add for another scalp, partial, and this thing actually ran so much. And because my average is way down here at 16, and I want to add at $17, I doubled my remaining position, new average 16.50, double it, new average around 16.60 or 16.75, somewhere around that. You see, you could turn the 10% into 40% only by letting small position run in your favor, or adding after it's running in your favor. Because I had so small position left, I took just as precaution small partial here, and I let the rest run because it just wasn't worth partialing for that level there. But yeah, instead of doubling, why not just fully add? Because I don't want to give any profits back. I try to increase my average so that if it goes against me, I just exited break even, risking the unrealized. So yeah, that was it. Do you guys have any questions? If not, I will upload this trade review session on YouTube in a few minutes. Trade safe, everyone, and I'll talk to you tomorrow in the chat room. If you have any questions, feel free to email me, email@birbaltraders.com, and that'll be it. BV, my average trades per day is 5, but today I had way more trades. I had 3 trades on plug, I had 2 trades on INTC, I had 2 trades on GME, and I had 1 trade on TLRY. That was too much. That was around 8 trades today. Only 2 trades tomorrow, Gio. All right. Thank you, everyone. Have a good day. Bye-bye.